So, it's the longest train wreck, Bed Bath & Beyond, and it's not over yet. Pass the popcorn. Investing is an act of faith, taking money now in the hope that you'll get more later. What Bed Bath & Beyond shows us is that investors have to be very careful where they place their faith. And if they place their faith with someone whose incentives are not aligned with theirs, things can get ugly fast. Also, sadly, Gustavo Arnal, the CFO and EVP of Bed Bath & Beyond, recently jumped out of a building and his death was ruled a suicide. I won't speculate as to why or what happened there. It's a very sad event. In this video, I'll show how Bed Bath & Beyond, during its life cycle as a public company, has had something for almost every kind of investor. I'll also explain Ryan Cohen's involvement in the company, his purported pump and dump scheme, and why I don't think that's a fair description of what happened. I'll end with some thoughts on the future of Bed Bath & Beyond and what investors should or should not consider when thinking about it as an investment in the future. First, the growth years. Bed Bath & Beyond went public in 1992. It was a very successful growth company as it expanded its store footprint and revenues increased. From 1993 to 2000, the stock split 4 times, and the stock rose from a split-adjusted IPO of about $1.07 to over $80. It was a 75 bagger and a very successful company. But things change, especially in retail, and consumers shifted online and towards bigger retailers like Kohl's, Costco, and Target, and towards better-run companies like TJ Maxx. The capital return years. So as much as investors love growth stocks, they also really like capital return stories. Those are stocks that pay dividends and buy back lots of stock, thereby returning capital to investors in the form of yield. And Bed Bath & Beyond became a great capital return story. From 2004 until 2022, the company bought back 265 million shares at an average price of over $44 a share. The company also paid a dividend until 2020. Paying out this dividend and buying back all this stock paid out over $12 billion to investors, which is fine if you don't need the money. But it turns out Bed Bath & Beyond did need the money. And now, with the stock trading around $8 a share, it looks like this huge capital return program was a complete waste of money and a terrible idea. The deep value years. For the last several years, Bed Bath & Beyond has looked like retail roadkill. I myself went into their stores a few times, tried to buy things, and couldn't. The only thing harder than being a customer at Bed Bath & Beyond, it seems, is being a shareholder. Analysts agree and think the company is in big trouble. Morgan Stanley has a $2 a share price target on the stock. They've mentioned liquidity concerns and think the company could go out of business. All this bad news pushed down the stock price and turned it into a deep value story. Deep value stocks are the cheapest stocks on the stock market. These are stocks where investors expect very little growth, and really any good news at all can pop the stock price up a bit. Deep value stocks are troubled, they have lots of competitors, they're not doing well. And certainly Bed Bath & Beyond at this stage of its life cycle fits that bill perfectly. So early this year, Ryan Cohen, a billionaire and the chairman of GameStop, disclosed that he had bought a 9.8% ownership position in the company. He did it by buying 7.8 million shares at around $14 a share, and by buying option contracts that controlled 1.15 million shares. These options were January 2023 calls at $60, $75, and $80 a share, way out of the money. They were very cheap options because no one believed that Bed Bath & Beyond had any chance at all of approaching those share price levels again with the current management team and the current strategy. But that's exactly where an activist like Ryan Cohen could add value. By changing the management team and changing the strategy, it's possible that he could have made really positive changes at the company that would have raised the share price. That's exactly what he did at GameStop. At GameStop in 2021 in January, he announced a similar holding, and the stock went from less than $5 a share to, at one point, a high of close to, I think, $400 or $500 a share, and it has settled in the $25 to $30 a share range. So anyone who invested alongside Ryan Cohen in GameStop has done extremely well. So Cohen wrote a letter to the board, and his letter asked the company to narrow its focus, consider selling itself, sell the baby brands, and align management compensation better with shareholders. This is all standard activist stuff, but it would be very exciting for anybody who's involved with Bed Bath & Beyond as an investor. Here's a guy with a great track record. He's a billionaire, and he's saying he's going to do good things at Bed Bath & Beyond. I know if I'd been an investor, I'd have been excited. And investors were excited. After closing around $17 on Friday, on Monday, the 7th, when the stock opened, it opened at $30 a share. It had almost doubled in value. A few weeks later, it was announced that Cohen and his team had some board seats, so it looked like he was working with the management team to make positive change. Nothing much happened until August 16th, 2022, when there was another filing saying that Cohen had increased his ownership position as a percentage from 9.8% to 11.8%. Investors got very excited. So the stock took off, trading a huge number of shares, almost 400 million shares on the 16th, and another 265 million shares or so on the 17th. And the shares traded in the high 20s. But then on the 18th, another filing comes out from Cohen, and he sold all of his stock and all of his options. He made like more than 5 times his money in the options, and he made something like a 70 or 80% profit on his shares. So a very good trade for him. But his reputation as an activist has probably taken a hit. Investors believing that they can invest behind this guy and that he will follow through on his plans to create value at the company might have to think twice. Some have called this a pump and dump, meaning he bought a position, manipulated the stock through basically PR, and then took advantage of the higher price to dump his shares. I don't think that's what happened here. He started buying stock in January. Here it is, he's selling in August, so he held for a long time in my opinion. He also did get board seats and he did work with the management team. His disclosure of a higher interest in the company came because the company continued to buy back stock. I can see how investors might have been confused by this because who would have thought the company needing capital, needing so much help would still be buying back stock? But they were. And investors who took a little time to understand what was going on might have seen that no, Cohen did not buy more. But, many are trying to react very quickly and they're being opportunistic and they're trying to make a quick buck. Remember, people were not long-term investing when the stock turned over something like almost 10 times its float, almost 10 times the number of shares outstanding. If there are 80 million shares outstanding and 600 or 700 million shares turn over in 2 days, that's like 8 times for every share. So many shares changed hands very, very quickly. People probably own these Bed Bath & Beyond shares for just a few minutes, trying to take advantage of short-term price fluctuations. And, that's trading. It's a very risky business. And I would say that the people who were at the end holding the bag, holding the shares of Bed Bath & Beyond at $28 a share when they read that Cohen was out, obviously were in a bad spot. They had made investments based on the idea that Cohen would do certain things, perform certain acts that would help them in the future. For him, it made sense to sell, so he sold. At least that's what I think happened. It's very risky to invest in stocks. It's very risky to invest in individual stocks. And it's even riskier still to invest in turnaround situations where you have no particular knowledge of the incentives and intentions of the people who are driving the change at the company. But I would say something here about the concept of meme stocks. Meme stocks, I think, is a disparaging term used by people who really aren't paying attention. Bed Bath & Beyond looks like a meme stock when you see it going up a lot, and you're not really seeing that there's a reason for this. A very successful turnaround activist like Ryan Cohen, who's been successful in pet retailing, he's been successful in video game retailing. Why can't Ryan Cohen once again be successful in housewares retailing? Of course he can. So the people who are investing behind him, I think, have reasons to believe that he's going to create a lot of value and they want to participate in that. It's not because of some JPEG of an ape on a rocket waving a flag. Now, for the future of Bed Bath & Beyond, the company has announced plans to do many of the things that Cohen wanted it to do. They're going to cut 150 stores, they're going to cut their expenses and headcount by 20%, but no one trusts them. They don't have a good track record. They're the people who put the company, in the ditch where it is. Why would I believe they're going to do good things? Why should I invest? And furthermore, if I were to invest now, I'm doubly screwed, pardon my French, because the company has announced plans to sell stock should the price appreciate because they need the money. After buying back all that stock at $44 a share, now they're going to be hoping to sell stock at, $20 a share. And they're doing that because, they're in a pickle. Retail is extremely competitive. You're going up against Amazon and Costco and all sorts of very large, well-funded competitors. There's really no reason to go inside a Bed Bath & Beyond at this point as far as I'm concerned. Now, full disclosure, yes, I am an owner of Bed Bath & Beyond shares because as an index investor, I own plenty of Google, Apple, Microsoft, Amazon, and I own dogs like Bed Bath & Beyond. So if you enjoyed this video, please check out my video on finance memes. It has great ideas about how hard it is to be a meme investor, what inflation's doing to prices over the long term and the short term, and it's funny, and there's a golden retriever. Bye-bye. It's hard to see how Bed Bath & Beyond could have gone so wrong. I mean, how hard is it to sell toilet paper and bath towels?